Can you use your HSA to pay for health insurance premiums? Normally, no, but in 3 unique circumstances, I'll explain those and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The HSA is a unbelievably versatile and valuable tool in your financial life if you're eligible. It offers the trifecta of tax benefits, and that is a tax deduction on your contributions on the way in, tax sheltered activity or tax deferred and sheltered growth. So if you invest your HSA, not many people do, but you can. If you do that, then all of the growth on that is going to be tax sheltered. Any dividends or interest that you earn on that, that's all tax sheltered as well. So that's the second tax benefit. And then the third tax benefit is if you withdraw the dollars from your HSA for a qualified medical expense, then you withdraw them tax-free as well. So tax-free in, tax sheltered while it's in there, and then tax-free out. No other tax tool has that same treatment. So very, very beneficial. And so the big idea is, if you're eligible to contribute to an HSA, are you maximizing the benefit in how that can be used for your financial life? Therefore, for maximizing the benefit, how much can you contribute? Well, for 2023, if you're on single coverage, $3,850 is how much you can put in and as an individual. But if you're on family coverage, $7,750 is your contribution. If you're age 50 or older, there's an extra $1,000 in catch-up that you can do. You can fund that for all of this year, but you also have up until your tax filing deadline, so April 15, to make that contribution for 2023 as well. We're close to the beginning of 2024, so the contribution limits, those are going up a little bit, $4,150 for single filers or not single filers, for individual coverage for 2024. And then $8,300 if you are on family coverage. That's for 2024. The same $1,000 catch-up if you're age 55 or older applies. All right, so that's maximizing the benefit on the way in. But again, the withdrawals from the HSA for qualified medical expenses come out tax-free. So how do you maximize that? The question, we get this all the time, is can I use my HSA to pay for my health insurance premium? Well, normally that answer is no. So if you're just on a group health insurance, right, can you use money? Can you reimburse yourself? Normally you're paying for your group health insurance right out of your paycheck. So can you reimburse yourself for the amount that you pay? Can you reimburse yourself out of your HSA? No, you can't. You can't. What if you're a small business owner and you've got an HSA plan, and maybe that's through healthcare.gov, and so you're contributing to your HSA? Can you pull money back out and pay that premium? No, you can't. And here's when we get this question a lot. My cash flow is pinched. I got to make my payment, my health insurance payment. I've got these dollars sitting over here in this HSA. Can I use my HSA to pay for these health insurance premiums because cash flow is pinched? Normally the answer is no. There's 3 times. There's 3 times, 3 unique circumstances when you can use your HSA to pay for health insurance premiums. The first one is the most applicable, and it's also the most bizarre, and that is you can use your HSA as a qualified medical expense, withdrawing dollars from your HSA to pay for Medicare Part B and Part D premiums. That's right. Or Part A as well. Most people don't have to pay out of pocket for Medicare Part A. So you're allowed to pay for your Medicare premiums out of your HSA. Now, when it comes to Medicare, that can be very, very confusing, completely confusing. So there's different parts and plans of Medicare, and you can't use your HSA to pay for all of them. So let me be specific. Again, you can pay out of your HSA. It's a qualified medical expense if you withdraw out of your HSA to pay for Medicare Part A, but most people don't have to do that. So Medicare Part B, which is right now the base rate is $164.90, $164.90 per month. That's going to be going up in 2024. That's the base rate. There's IRMA, could be a surcharge on top of that. You could pay for Medicare Part B, or you could pay for your Medicare Part D. That's your prescription drug plan. It changes, it varies per person depending on what sort of coverage you select. $20, $25, $30, something like that. So you can pay for your Medicare Part A, B, D out of your HSA. you cannot pay for your Medicare supplement or Medigap policy out of your HSA. Now, here's why that is confusing. Well, I guess right off the bat, it's, well, why not make both of those eligible? That's one. But the second is, when you're on Social Security, your Medicare Part B automatically comes right out of your Social Security. You have to pay it out of your Social Security. There's no other choice. When you're drawing Social Security and you're on Medicare, the Part B portion is going to be deducted directly from your Social Security check. So that makes it unconventional that then that would be an allowable qualifying medical expense from your HSA. But yes, it is. You can reimburse yourself by withdrawing dollars from your HSA. And then the other reason why this is confusing is when you're on Medicare, and we get this question all the time, when you're on Medicare, can you contribute to your HSA? Can you put new dollars in? No, you cannot. But this is an opportunity if you've got dollars stored up in an HSA, or you've contributed dollars during your working career while you had a eligible high deductible health plan and you've got a balance built up, you can use those dollars during your retirement years while you're on Medicare to help cover Medicare Part A. Most people don't pay that. Part B and Part D. So that's one of the circumstances, one of the rare circumstances you can use your HSA to make a qualified withdrawal and use those dollars to pay health insurance premiums. Second unique circumstance is when you're on COBRA. That's right, when you've left an employer, whether you've retired or whether you are transitioning in between jobs, and you're continuing to get your health insurance from that old group plan, okay, that the COBRA, that continuation of benefits. Now, you know this can be extremely expensive, COBRA can be, and it's all relative, of course, depends on what your other options are, but when you retire, let's say, and most other times, but not all, when you leave an employer, if you have group health insurance there and if they offer COBRA, then you're able to private pay and keep that coverage for up to 18 months. In some circumstances, it's a little bit longer than that, up to 36 months, but most scenarios, it's up to 18 months. The difference is, while you were working and had that group plan, typically you were only paying a portion of the health insurance actual premium, and your employer was paying the rest of it. Well, when you're on COBRA, the employer is not paying for it. You pay for 100% of it. You might even have to pay an extra 1 or 2% in administrative fees as well. So it's a costly expense paying for COBRA, and yes, you are able to use either directly from your HSA or to reimburse yourself. You can use your HSA to pay for COBRA as a qualifying medical expense. And then the final circumstance where you can use your HSA dollars to pay for health insurance is during a window when you're unemployed. When you're drawing unemployment, okay? When you're drawing unemployment. Not, to be precise, not just when you're unemployed. When you're drawing unemployment. That is a sort of a universal exception that whether you're on COBRA or whether you're getting health insurance through healthcare.gov or something else, when you're drawing federal unemployment, then you are eligible to draw dollars out of your HSA and use them to pay for your health insurance premium and have it be treated as a qualified medical expense. And I think that's logical. I think that makes sense. During that time, unemployment, that's deemed to be a financial hardship, and you've got to pay for health insurance. And well, what resources do I have at my disposal to pay for health insurance if I'm not earning an income right now? Allowing you to draw out of your HSA to pay for your health insurance, no matter whether that's COBRA or whether that's healthcare.gov. Many people during that time of unemployment will look to healthcare.gov to try to get health insurance and receive some premium tax credit, a reduced monthly premium. Makes sense that the rules would allow you to use your HSA to pay for those. So there you have it. Not in every circumstance can you use your HSA to pay for health insurance premiums, and in most circumstances you cannot. But those are 3 times when it would make sense. And all of this kind of goes back to the original question, and that is, are you eligible to be funding an HSA? Are you eligible? Do you have a qualifying high deductible health plan and no other health coverage? And then second, are you maximizing the benefit that it can bring to your overall financial life? Your CFP can help you with that. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.